Welcome to Charts Today. My name's David Linton, and today's edition for Thursday, the 20th of July, comes to you from London. And we've seen a little bit of a recovery in the dollar over the last couple of days, but it is still bearish below the cloud on both the medium and short-term charts, and the long-term chart is turning bearish as we talk about each day now. The euro, conversely, turning bullish on the long-term chart, and we do have these upside targets to play for. We are just seeing a little bit of a sell-off at the moment. And the Japanese yen, we're seeing here dollar recovery here as well. But long term, this transition of the dollar strengthening against the yen is still just on hold. And until we make new highs here, the weaker dollar is, we're seeing weak dollar, weak yen basically. Looking at sterling, sterling just turning back below the 130 level. So having broken that 130 mark, just really struggling to hold on to it, puts us back into a bearish frame of mind on the short-term chart. And looking at euro sterling, we're seeing that play through as well on the euro, as euro stronger, sterling weaker, with downside targets of around 2%. Looking at Swiss franc, sterling also lower here against the Australian dollar, just a little bit of a recovery, but the Aussie dollar stronger than sterling on all three charts, so we're just seeing that surge in the Australian dollar lately. The S&P 500 index was up another 0.5% last night, taking us to another new all-time high. And if we look at the Nasdaq, we're just nudging new to high territory as well. Having had a wobble in June, we're just now starting to move higher than that level that we saw. So that's a closing high, which is good news for the Nasdaq. Dow Jones we're seeing here as well, running higher, and the Russell 2000 index also running higher, breaking out to a new high, so that's very strong for the broader market. The S&P future up very slightly this morning. The Nasdaq E-mini also just really virtually unchanged, so no heads up yet as to which way the market will open. FTSE up 0.5%, breaking higher as well, so stronger US market helping there, and the FTSE 250 also moving higher, so we're just seeing that strength in markets all round. The DAX is now higher above the cloud, so we're seeing that as well, and the Nikkei 225 also higher. Hang Seng is moving higher. We're seeing markets just generally all moving higher. Shanghai as well. The Sensex, the Indian market, is down very slightly, but this is still a very bullish looking market. And the Australian market up 0.5%, also looking better as well. Brent crude just falling away slightly, but still in a short-term uptrend, as is WTI. Interestingly, on Brent crude, if we look at the chart, we do have multiple upside targets into the 50s here, so we might just break above $50 in the short term. Key thing is, of course, will we go to make a higher high than this one that we've seen at the end of June. Key thing is we are in a downtrend below the cloud on the medium term chart, and WTI as well. But we do have some short-term upside targets, so we're just seeing crude recovering a little bit. US nat gas sitting at this 307 level, just failing to break higher on the midterm chart. Taking a look straight at gold, we see that gold is still in an uptrend, just flattening slightly on the short-term chart, but in an uptrend. No clear upside targets on the short-term chart, so that is a bit of a concern. And the same with silver, although we do have an upside target of 2.5% here on the short-term chart. Taking a look at US Treasury yields, we see that we're back below 2.3% on the yield, sitting at 2.27. Outlook for US interest rates not as strong as it was. Apple moving higher, it's back above 150. Google also moving higher, not quite regaining its all-time high territory. Amazon is moving higher than the high we saw in June, and Facebook really rocketing at the moment. Results next week, and Facebook running up to those, and Microsoft also looking stronger as well. That's it for today. Until tomorrow, happy charting. See you then.